Wall Street ends lower on Monday following JP Morgan's takeover of First Republic, but all eyes now on the Fed meeting due to start today. Stocks in the Asia Pacific open higher. The SGX Nifty suggests a strong start for the Indian market. Oil prices fall over 1% on Monday, with Brent trading at levels of $79 per barrel. Concerns around the impact of another hike by the Federal Reserve and weak Chinese manufacturing data weigh on prices. Market regulator SEBI moves the Supreme Court, seeks 6-month extension to complete probe in Adani Hindenburg case. The plea prescribes scope of investigation as per 12 suspicions transactions in the Hindenburg report. Kotak Mahindra Bank reports a record 3 return on asset ratio in the fourth quarter. Net interest margin comes in at a record 5.75%, while the gross NPA and net NPA ratios come in at a 32-quarter low. Auto sales for the month of April come in mixed, with Maruti Suzuki, Eicher Motors and TVS reporting a growth in total sales, while Tata Motors and Hero MotoCorp see a decline. Good morning in the Mumbai News Centre. I'm Sonal Bhutra. You're watching Power Breakfast on CNBC-TV18. This is Tuesday morning. We come back after a long weekend, so there's a lot to catch up on. But first up, as always, let's take a look at the Asian markets. They are largely higher despite the weak handover that we got from the Wall Street. So it is 0.4% higher on the Taiwanese index. The Hang Seng too is higher by 1%. So across the board, we have good gains coming in as far as the Asian markets are concerned. Earnings are trickling in the US markets. The commentary from the corporates is very important to track, and we have the Fed meet also that starts today, so any directional commentary on that one is something that will have an impact on global markets as well, ahead of which we are seeing some positive reaction in the Asian markets. We have Nikkei, which is higher, the Shanghai markets are higher, all of them are higher in trade today. And if we compare SGX Nifty with Nifty futures, since we were not trading yesterday, that one optically is indicating a lower start. But if we adjust it for Nifty futures, it's a higher start for our own markets. Almost 120-point open is what the SGX Nifty is indicating as we speak. Moving on to the US markets, Wall Street ended the first trading session of the week lower, with the Dow Jones down 46 points, the S&P flat, and the Nasdaq Composite closing about 14 points lower. For the month of April, the S&P rose 1.5%, while the Dow added 2.5%, and the Nasdaq was marginally higher. For the week, both the S&P and Dow rose a little less than 1%, while the Nasdaq gained 1.3%. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
For CNBC-TV18, I'm Bertha Coombs. Wall Street finishing the first day of May with modest losses as investors look ahead to the 2-day Fed meeting beginning Tuesday and the April jobs report due out Friday. The Dow down 46 points, just a fraction of 1%. The S&P finishing pretty much flat as well. And the Nasdaq down 14 points, a little over 0.1%. Markets mostly brushing off jitters over the banking sector after JP Morgan Chase agreed to buy failed First Republic Bank. First Republic's demise marked the second largest U.S. bank failure of all time, behind only Washington Mutual's collapse during the 2008 financial crisis. Meantime, it was smooth sailing today for Norwegian Cruise Line Holdings, with the stock surging 9% after better than expected quarterly results. Revenue more than tripled from a year ago, and Norwegian also issued an upbeat full-year outlook on strong travel demand. That's what's happening here in the U.S. Back over to you in Mumbai.
In fact, let's also hear out what Mohammed Al-Arian, Chief Economic Advisor at Alliance, makes of JP Morgan's acquisition of First Republic Bank.
This was an unusual situation in the sense that all the incentives were aligned among the three big actors: the banks, the FDIC, and the Fed. You had an unusual alignment, and yet what comes out has all sorts of unintended consequences and collateral damage. We're making the big banks bigger. We're changing the conventional wisdom about what is a safe bank. It turns out that the banks that were once viewed as too big to fail and too big to manage are now the safe banks. We have increased moral hazards. 11 banks had tens of billions of deposits in the banking system. And it just tells you that we are so deep right now in the world of second best that whatever we do will have collateral damage and unintended consequences.
Okay, let's stay with the developments from the United States. The U.S. could fail to meet its debt obligations and hit the debt ceiling as early as June 1, wants U.S. Treasury Secretary Janet Yellen. In a letter to House Speaker Kevin McCarthy, Yellen said that new data on tax receipts forced the department to move up its estimates of when the Treasury Department will be unable to satisfy all government obligations. In light of the new and earlier estimate, President Joe Biden has invited the Big Four congressional leaders for a meeting on May 9th in the White House to discuss the debt limit. Okay, all right, that's the global market action, but how will these overnight cues impact our own markets? We have a lot to catch up on as far as our own domestic cues are concerned as well. Our research team is joining in to tell you just that, the trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you and welcome back after a long weekend. Vivek, let me come across to you first up. What is the market setup looking like today?
Well, good morning. Largely positive handover is what we are seeing. Overnight, the U.S. markets actually ended flat with a marginal negative bias. European markets were closed. However, crude oil prices continue to support. Oil prices ended yesterday with quite a sharp negative bias. Brent futures ended lower by over 1%. So did WTI futures, almost 1.5% lower. Now, when you're talking about Indian markets in the month of April outperformed, both Asian peers as well as global markets quite significantly. Now, Indian markets now currently trading near a 2-month high. And when you're talking about the key sectors that led the up move last week, IT, realty as well as PSU were the significant outperformers in the week gone by. Also, remember, market move has been aided by the strong FI buying that we've seen actually in the last couple of trading weeks. Today, important cues to watch out for. Many important result reactions, top among being Kotak Mahindra Bank as well as Ultratech Cement. Also keep an eye out for, yesterday you saw quite a few auto companies come out with the auto sales numbers for the month of gone by. And remember, these reactions will also be something that we will see in today's trading session. The GST collections, coming in at an all-time high at 1.87 lakh crore. When you're talking about the Asian markets, largely flat to positive negative cues. SGX Nifty, adjusted SGX Nifty, taking into account yesterday's trading session, indicating a slightly higher opening compared to Friday's close.
Okay, all right, Vivek, thank you so much for that. So a lot of domestic cues, and Vivek did mention some stocks as well. So let me go across to Surbhi. She'll list out all the stocks that are in focus today. Surbhi.
Hi, good morning. We have a whole host of stocks to track this morning. The first one is Kotak Mahindra Bank, where the Q4 FY23 ROA is close to 3%. The net interest income is up 35% on a year-on-year basis, and the net profit is up 26% on a year-on-year basis. Moving on to IDBI Bank, where the net interest margins have been maintained at 5%, and the gross NPA ratio has come in at 6.38% versus 13.8% in the previous quarter. M&M Financial Services, the net interest income is up 10%, and the PAT is up 13.8%. SBI Card, where the total income is up 30% and the PAT is up nearly 3% on a year-on-year basis. L&T Finance, where the gross NPA is at 4.74% and the net NPA is at 1.51%. Ultratech Cement, the numbers are pretty much in line with the CNBC-TV18 poll. The revenue is coming at 18,662 crores and the EBITDA is coming at 3,320 odd crores. Other than these results, the auto companies will also be in focus on the back of their monthly sales numbers, and Reliance and ONGC will also be in focus as the windfall tax on crude petroleum has decreased to 4,100 rupees per ton versus 6,400 rupees per ton.
Okay, thank you, Surbhi, so much for that. Finally, let me go across to Nigel, joining in with all the cues from the F&O space. Hey, Nigel.
Well, morning, Sona. What a beautiful session we had before we went into this long weekend on Friday. The market surge, and particularly the last hour, gave you a sense the kind of buying that we're seeing in our own markets. After that sort of a move, you're looking at the Nifty as well as the Nifty Bank. Both of them added some bit of open interest in a surging market. Told you that there is some long positions that have been taken. And the FIs, they added more longs than shorts. Now their long positions are at around 43%. That's the highest actually we have seen in multiple months, close to around 3.5 months odd. We haven't seen long positioning at these levels. Though the shorts, they still are in the system, close to around 57% of those positions. Options, they're buying more puts than calls. So that's telling you in case things go wrong, there is some cushion on the downside, given that we have a big, Fed meet that's coming up. They're writing index options as well, and puts in particular. Out there as well, they're writing close to around 3 puts for every, 2 calls. So the writing aggression is telling you that maybe this market has some unfinished business on the upside. In terms of active strikes, the 18,200 call, 18,100 call, there's an attempt going to be made to defend that 18,150 to around 18,200 odd mark going by the options data. But on the downside, take a look at the 18,000 put. You had close to 80 lakh shares getting added on a first day of a new series. So aggressive writing is what we've seen at that levels, which brings us to the levels. Support comes in around the 100 DMA, 17,800, around 17,825 odd. That should be a crucial support zone. Till you're holding on to those levels, the trade would be stay long with that as a bit of a stop loss, trailing stop loss. On the resistance side, 18,175 to around 18,200, the bears will come in to fight at these levels. But if you're looking at the Nifty bank is the one that really has been leading the way. Even the last 1 month or so, everyone's saying what a big rally we have had on the Nifty, 4 to around 5% odd. But the Nifty bank, that's up close to around 7.5% odd, giving you a sense about the kind of move that we have seen, outperformance of the Nifty bank. So that holds the key yet again. Compare the SGX Nifty with the Nifty futures as well, though it's looking like we're going to be starting off in the red. Actually, we'll be starting off in the green because the SGX Nifty, compared with the Nifty futures, in fact, that's suggesting a gap of close to around 100 points. I don't think it'll be so extreme, but we'll start off well in the green. Back to you.
Okay, we expect to start in the green today. Thank you, Nigel, Vivek and Surbhi for joining us and prepping us up for this trading day ahead. With that, we'll slip into a break now. Up next, we'll get you the details of SEBI's plea in the Supreme Court in the Adani Hindenburg case. Stay tuned for all those details. Welcome back. Still tuned into Power Breakfast on CNBC-TV18. Getting to a big story. Market regulator SEBI has pleaded the Supreme Court for a 6-month extension to complete its investigation as far as the allegations made in the Hindenburg report are concerned against Adani. Ashmit Kumar is joining in with all those details. Ashmit?
Well, the market regulator SEBI has moved the top court and is seeking a 6-month extension for completing its investigation into the Adani Hindenburg saga. What the SEBI application essentially says is that as per the Hindenburg report, there are 12 suspicious transactions which need to be investigated for violations of disclosure norms on related party transactions, corporate governance norms, minimum public shareholding norms, as well as stock price manipulation. This is essentially the scope of investigation, but that's not all. SEBI also goes on to say that it also wants to investigate the trading action that took place before and after the Hindenburg report, and will be checking for violations of FPI norms, of ODI norms, of insider trading regulations, as well as norms on short selling. SEBI also says that these prima facie views have also been shared with the expert committee. As for the scope of investigation in terms of companies that may be on the radar, on SEBI radar, SEBI points out that there are 7 listed entities of the Adani Group which will be looked into. The 7 entities are Adani Enterprises, Adani Power, Transmission, Green Energy, Ports and SEZ, Total Gas, as well as Adani Wilmar. SEBI also says that not just these companies, but also their subsidiaries and step-down subsidiaries will also be on the radar, and that investigations may also require depositions by key management personnel as well as auditors. SEBI on its part has sought a whole host of information and a whole host of details, financial documents, statement of assets, liabilities, receivables, details about directors, promoter shareholding, also talks about minutes of the meeting as far as board meetings and auditor meetings are concerned, related party transactions, as well as details of overseas entities which are connected to these transactions. So that's essentially a very voluminous set of documents that SEBI says it has with it, and says that because of the voluminous nature and the complex nature of these transactions, ordinarily it would take 15 months, but SEBI says they'll try to wrap this up within 6 months' time. Now, the Apex Court will have the final word on granting this 6-month extension.
Okay, Ashmit, thank you so much for joining us with all those details. We'll keep coming back to you as and when there are more updates. But let's talk about some earnings now. Kotak Mahindra Bank reported its 4th quarter numbers. This is on Saturday. So Abhishek is joining us with the fine print. Abhishek.
Well, Kotak Mahindra Bank reported a strong set of numbers. When was the last time that I saw a 3% ROA for a bank which has balance sheet of more than 2 lakh crores? So this is the first time ever that I have seen a 3% ROA for such a balance sheet. What has worked in the quarter? The ROA, return on asset, is at record breaking high. This has been driven by the fact that net interest margin is at record high for them at 5.75%. NII growth on a YY basis is perhaps the best that you are seeing in last 7-8 years or even more. Retail segment was the key driver amongst the loan growth, growing at 23.5% YOY and about 5.5% sequentially. Asset quality, both the gross NPA and net NPA ratios are one of the lowest that you are seeing in last 7-8 years or even more. Cost to income ratio has dipped down to 43.9% when compared to 50.3% in the previous quarter, perhaps at a 7-quarter low, and provision coverage ratio nearly to 80% level is one of the best that we have seen for Kotak Mahindra Bank. Fee income growth was really strong. Restructure book is the lowest that you are seeing in last 8 quarters, now at just 0.22% of the loans. Consolidated ROA and ROE are one of the best that you have seen in Kotak Mahindra Bank. What has not worked in the result is that subsidiaries' performance is soft, both YOY and quarter-on-quarter. The overall loan growth on a sequential basis is impacted by the corporate portfolio, which grew by just 5% YOY and about 1.5% sequentially. CASA ratio at 52.8% is perhaps the lowest in last 15 quarters. Both in terms of NI and PAT, it's a beat on our poll. Back to you.
Okay, beat on our poll. Kotak Mahindra Bank will be in focus. With that, we'll slip into a short break and get you all the cues from the commodities market when we come back. Stay tuned. Welcome back. Still tuned into Power Breakfast on CNBC-TV18. It's time to talk commodities now. Manisha Gupta is joining us, and she's telling what's happening in that space. Hey, Manisha, good morning.
Morning, Sonal. Thank you for that. Well, our two major events this week. One is the US Fed meeting, and the other is the ECB monetary policy meeting. And then Reserve Bank of Australia also has a monetary policy meeting in this week. So markets are going to be quite choppy. Having said that, from 1st to 3rd of May, you have China out for a Golden Week holiday as well. So the participation or the liquidity is going to be less, and exaggerated moves more here. So the crude oil prices, while the overnight saw some gains coming in, and while the month of April has seen some gains as well after 5 straight months of decline, but the markets are jittery in sense of demand coming in from China and from US as well, where we have seen crude inventories continue to gain up. Overnight, after China said that the weak data is something that they are watching for, and that they will come out with some stimulus for growth going forward, you saw strong gains come in for many of these metal prices. So 1% is where aluminum and zinc were trading. Copper gained all the way to 2.5% as well. But by the time the markets closed in New York session and the Asia opening today, it has been slightly on the weaker side yet again. The economic data, whether it has been about manufacturing activity, housing starts, or service sector, all of these numbers from China have come in on the weaker side. But some support from the fact that China, when it comes back from the Golden Week, could lead to some stimulus, perhaps, is what is supporting the markets. In the meanwhile, it's going to be all about the monetary policy meetings this week that the street will take a cue from.
Oh, it absolutely will be. Manisha, thank you so much for joining us. So those are the key events to watch out for as far as the commodity market moves are concerned, and of course what's happening in that space as well. Let's go across to Sonia, because automakers have reported their sales numbers for the month of April. It was a mixed bag this time around. Oh, absolutely. It was a mixed bag for the auto pack. So if you look at it, Maruti's numbers were not too bad, actually. There was a good growth that we saw of around 6.5% on a year-on-year basis. That's because of a domestic growth of around 8.5% to 9% that the company reported this time around. The exports were under a bit of pressure. Exports were down about 8%, but otherwise the numbers were not too bad. Let's move on. A couple of these two-wheeler makers have actually disappointed this time. Hero MotoCorp, the sales were below what the street was estimating. The total sales were down 5.5%, coming in at just 3.96 lakh units versus Nomura's expectations of 4.5 lakhs. The fall was led by a weakness in the motorcycle segment, and over there, motorcycle sales were down 6% on a year-on-year basis. If you move on, TVS Motor as well, there was hardly a single-digit growth that TVS Motor has seen this time around, a sales growth of just about 4%, led largely by two-wheeler sales, which grew just about 5%. Tata Motors, the total sales growth actually fell by about 4%, so I'm expecting the stock to be in the red. Domestic sales were down by about 4%, and that was led largely by a fall in commercial vehicle sales. So total CV sales for Tata Motors fell about 27% on a year-on-year basis, coming in at 22,492 units. The passenger vehicle sales was the only saving grace. That, including electric vehicles, was a growth of around 13%, but commercial vehicles was the one that disappointed. The one that stood out for me on the upside is Eicher Motors. Royal Enfield sales growth was pretty strong, up about 18%, and commercial vehicle sales growth was also good at about 18.9% at 6,567 units. So all in all, a mixed bag coming in this time for the auto pack. Okay, all right. Thank you so much, Sonia, for joining us and analyzing those numbers for us. We'll just quickly take a look at the Asian markets before we wrap up on the show, because it is indicating a higher start for our own markets. However, Hang Seng has fallen from the highs of the day, and when we started the show, it was high by around 0.4%. Right now, it's down 0.1%. So there has been some profit taking from the top, and similar is the case with Taiwanese index as well. It has fallen from the highs. If we look at the SGX Nifty, that should come up for you on the screen. That one is indicating that the start for our own markets could be in the green. 120 points higher is what this one is indicating. Let's see whether that happens or not. But yes, the indication is we could continue the gains that we saw in Friday's trading session. We'll take your leave now on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.